Well, first, let me say, I mean, I've thought for years that LBMA, COMEX, LME, they would default. They would default via a failure to deliver. And my thought process was you would have a wealthy cabal or sovereigns would get together, or even just one sovereign would buy a bunch of contracts, demand delivery, and it would cause a default. That would have elicited, if it were foreign sovereigns, that would have elicited a response from the U.S. Treasury. Instead, what Putin is doing here is he's just simply saying, if you want Russian gas, you have to pay for it in rubles or gold. I think it's assured that that's going to happen with Russian oil, with Russian wheat, you name it. With all their products, what they're saying is you're going to have to pay in rubles. The problem for the world is the world has become financialized, if you will, and you cannot run machinery on diesel contracts. You can't eat contracted corn. You have to have the real product. So that's the ace in the hole for Russia, is that they're a major supplier of many different raw materials, many different products. And what he's saying is you have to pay in rubles, and the problem for the world is they don't have rubles. For the most part, very few sovereign central banks hold rubles at all because they don't transact in them. What Putin has done here is he's created a bid in the exact same manner as the petrodollar started off in 1973. When the Saudis agreed and the other Arab countries agreed to only accept dollars. That's what kept the dollar from collapsing after we went off the gold standard. That was embedded demand, if you want to call it. So what Putin has done is he's creating demand for the ruble. That's the first part of it. The second part of it is, and this was very close to the bottom of the ruble after the Russian operation started. What they've said is that until June 28th, Russia will bid and pay 5,000 rubles per gram. And the outcry from the gold bugs immediately was, oh my gosh, that's only $1,450 per ounce gold. Well, from that point forward, the ruble began strengthening, and it's almost done a full round trip. It's not quite there, but at this point, that 5,000 ruble bid per gram equates to just under $1,900 an ounce. And I think we saw something last week. I think it was Tuesday or Wednesday of last week, where we had, another COMEX attack on gold and silver, and the price of gold got to within about $20 of the Russian bid, and then turned around and started running higher like a scalded dog. So what Putin has done is he's put a put under the gold market by putting that bid. And if you put the two together, the fact that there's going to be much more demand, billions upon billions of if you want to call it in dollar terms, of demand for rubles, that's going to push the ruble higher over time. And what that does is it pushes the 5,000 ruble per gram bid higher and higher. So that will also revalue, if you will, Russia's gold reserves that they already hold. So in essence, it is taking a playbook right out of the U.S., right out of Henry Kissinger's book, and copying what we did with the dollar in 1973. And I just want to add that this event with Russia pricing gas in rubles is the biggest event since 1971, since 1973, since the dollar going off the gold standard and then becoming supported by or as the petrodollar.
Whoa. I think it's a huge story. I think it has huge. People think the dollar's going to go away. I don't think the dollar's going to. Well, the Federal Reserve note may go away, but I don't think the dollar is going to go away. I think it's going to get depreciated relative to real stuff. I mean, isn't that what we're seeing? I mean, if you look at the dollar on the USDX, oh, it looks strong. If you look at the dollar buying coal, I mean, they just hit coal at all-time high.
Right.
I mean, yeah.
Right.
It's just unbelievable. I mean, you got, I did this. You got, a lot of I think the average is $4.22 a gallon across the country for a gallon of gas, and it was $2 something, when Trump was in office. And I mean, the inflation since Biden has gotten to office is astronomical. I mean, it's huge.
Well, what you just did was you explained the ramifications or the nuts and bolts of inflation. For years, I mean, even to this day, the government wants you to believe that that inflation is the CPI. And I've talked to you many times before. I've written, I've done other interviews, that if you look in a dictionary, an older dictionary, not a woke dictionary, if you look in an older dictionary, you'll find out that the true definition of inflation is the creation of money, or the over creation of money. What we're seeing now is the result of the inflation that's already occurred. So what you're seeing is you're watching the dollar lose purchasing power versus everything. And the government's telling you that inflation's 7.9%, and all you have to do is go back and look at how much money supply was put into the system, which is way, way higher than 7.9%. And I mean, look at John Williams' numbers of the results. The results are a 15 to 20% drop so far in purchasing power. So yeah, the USDX, we have always said that the USDX was, it's a bullshit index, because you're comparing fiat paper with fiat paper when you need to compare fiat paper with the things you absolutely need to live.
The real stuff. Brainerd, right. Fed President Brainerd, we could start raising rates faster. I mean, John Williams was talking about this idea the economy is overheating, and he says it's preposterous. Williams. He said we had a failed, Christmas buying season. November and December were awful, and they're going into this. We do not have an overheating economy. We have overheating inflation, but we do not have an overheating economy. Do you think the Fed is going to make the mistake? They're talking about I'm watching Bloomberg. Oh, they're going to have a 0.5 point rise. They're going to have, they're talking about, they're worried about the value of the dollar. They're worried about inflation. And I think they're worried to the point that they don't care if they crash the economy. Are interest rates going to rise at least for a while till they do an about face? I mean, what's your roadmap for what the Fed is going to do? I mean, then they're going to stop it and start printing more money as the economy tanks, and everybody thinks, oh, the Fed's got it. I mean, I don't know what to think about this. What's your view on what the Fed roadmap is going to look like if they make a policy mistake? The floor is yours.
Well, this is why Jim termed or created the term QE to infinity. They can never, ever stop printing, because that's the same thing as shutting off new money into a Ponzi scheme. If you go back to 1982, when interest rates peaked, and they came down, they've come down consistently since 1982. But along the way, there were times when the Fed raised rates. 1987, 1994, 98, 2000, 2007, 2008, again in 2018. And each time the Fed raised rates, the markets rebelled. The markets, in several instances, collapsed. And where we stand now, the Fed has raised rates just 1/4 point. But look at what's happened with market rates. For instance, the 10-year Treasury was like 0.4% a year and a half ago, and now it's almost 2.5%. My guess is you can see rates rise to, I don't know the exact figure, but I don't know, 2.75, maybe 3%, and then something breaks. That's what's happened all the way along since 1982, is we've had this incredible buildup in debt, and the debt was used to inflate the system, if you will. The problem now is there's so much debt in the system, they can't raise rates because the debt service then becomes unpayable, and then you have a deflationary collapse. So yeah, you're right in your assumption that at some point in time rates will turn and start dropping, but that will initially happen because the Fed will panic and start QE up again. The problem is, at this point, markets are much bigger than central banks. So this time around, it's very possible that the Fed does start to print, does start to ease, but interest rates don't really come down. Because at this point, there is absolutely zero premium for risk, or risk premium. If there was a risk premium, you'd see interest rates much, much higher than they are now, but that would not be tolerated by either the real economy nor especially the financial engineering that's going on.
Do you think we're headed for a recession? I mean, that's what the inverted yield curve, that's what the experts say. The short end is higher than the 10-year Treasury. I mean, you get more money for a 90-day note than you can for a 10-year Treasury, which is kind of backwards. Only in the face of we're facing some sort of real recession. How in the world, if the yield curve is inverting, do we have an overheating economy?
It's because the Fed was late. They should have started raising rates long ago, and at this point, now they're raising rates into a weak economy. We basically have a flat yield curve, slightly inverted. But just to dispel, I've read things on inverted yield curves, and I'm going to tell you, we have, since World War II, we have had recessions when there was not an inverted yield curve prior. However, every time we've had an inverted yield curve, we've gone into soft, if not recessionary periods. So the yield curve itself is forecasting a downward turn in the real economy. And again, I can't stress enough, there's so much debt in the system now that you really cannot have a recession, because again, how does all this debt get serviced if there's less cash flow being generated from the real economy?
They're cutting off they're shutting down the global economy. They're shutting down, we're not going to buy any gas from Russia. They don't have any in Germany and Europe. They basically nationalized Gazprom in Germany. I mean, what idiot is running the show? Or is it, as Jim Sinclair says, too stupid to be stupid? Is this what they're trying to do? Are they trying to crash the global economy? Because they're doing a good job.
Well, that's my question. It's so stupid. It has to be the plan. I mean, it's so purposeful. What was COVID all about? COVID came along after September of 2019, which is when the repo market blew up. The repo market went from well under 1% to 10% overnight. From that point forward, the Fed had to put in $50 to $100 billion every night just to keep that market under control. And then fortunately, along came COVID. And what did that do? That shut down, for lack of a better term, the real economy, which also slowed the for so it bought them time and it gave them a reason to do what central banks do, and that's just print money.
Well, they printed tons of money. I mean, they spent unbelievable amounts. You probably know the real something like $6 or $7 trillion just for COVID.
Yeah, and there's more behind the scenes. There was an article put out by Wall Street on Parade, Pam and Russ Martins, that cumulatively the Fed had put out 28 trillion with a T dollars in the early days of COVID.
Boy, oh boy, and then we're still, and people don't want to even, they don't even mention this on mainstream financial press. We're doing 120 billion a month. 120 billion. We're doing $1.4 trillion, and that's just like, oh, it's okay, it's fine.
And that is still QE. I mean that is the Fed buying debt securities and putting it on their balance sheet. So what they're saying is, or what the Fed has said, is that they're going to cut that back. But still, cutting it back is not tightening, it's just being less loose. And let's be honest, Greg, going back to 2007, 2008, after that break, the financial system has been on life support ever since. I mean, there has never been any period of time where the Fed actually tightened. They might have gotten close to neutral, but they never tightened. And the life support has been on for what, 14 years now.
And so I want to loop back around to the ruble, because if they do what they're doing and they keep doing, they cannot stop putting money into the Ponzi scheme, otherwise it collapses. And they can, pretend like they're going to raise rates and fight inflation. If they do that, on the other end, we do have this new advent of the Petro-Ruble, for lack of a better term, right? We have rubles tied to oil, just like what you said. It was just what they did in '73. So if they start printing money like crazy, doesn't the ruble gain in value? Don't we have a bona fide competitor currency, even though it's not as big as the dollar? But doesn't the ruble start gaining in value if the Fed, if they go, they start printing money?
I don't think it has to do with the Fed printing money. The strength in the ruble is going to come from the world making ruble purchases, because in order to buy Russian goods, they're going to have to pay in rubles or gold. I think that was said tongue in cheek, but they did say it. So the strength in the ruble is going to come from purchasers of Russian goods having to purchase the ruble first in order to make settlement. What that does is that's going to create less demand for dollars, because in the past either dollars or euros were used for the settlement. So it's going to naturally create less demand for dollars. And what you're saying is, the Fed's going to have to print more and more. Well, that's just going to exacerbate the problem.
Less demand and more dollars, more digital dollars out there.
Right.
Germany, I don't know how they're going to build BMWs in Germany. They're cutting off the gas. Who in their right mind would go, okay, we're going to shut our nuclear power plants down, which is what Germany did, and then we're that Russia, bad Russia, you destroyed our Ponzi scheme in, our money laundering, child trafficking, prostitution rings, our drug trafficking, our internet hacking, the cesspool that is Ukraine. Russia broke that up, and now they're going to cut off their gas. How are they going to build BMWs? How are they going to build stuff in Germany and the rest of Europe with cutting their gas supply off?
Well, that's truly the problem. Now we're not talking about the financial markets. Now we're talking about the real economy. That's a huge problem, And to someone who doesn't think it through, I guess from a populist standpoint, it sounds good. We're going to punish bad Russia. The reality is now there's going to be less and less real goods, which is less supply. And even if the demand doesn't move, that means pricing is going to go higher. So it creates more inflation. But you're right. Without gas, without oil, cars don't get built. I mean, it's going to destroy the German industrial complex, which is, basically the center or central to Europe's production.
Somebody asked me when, and I got this amused. When is the tip off that it's going to get really bad? And I said we're going to have a credit crisis. The credit's going to stop. Explain that. You said that before, that when we have the next one, it's going to come with a credit crisis. Please explain.
Everything runs on credit, and I typically use a loaf of bread as the example. In order to create a loaf of bread, you've got to have seed, you've got to have fertilizer, you've got to have diesel for your machines. And how is that paid for? Typically with credit. So you got the growing season, then you got harvest. There's more credit used there. Then the wheat goes to a silo. There's credit used there. Of course, there's trucks that are used between the field and the silo, and then the silo and the production facility. The production facility, they use credit. They bake a loaf of bread. It goes on trucks again to the grocery stores. There's at least 10 different uses of credit to create one loaf of bread. And if any of those instances of credit use doesn't happen, there's no loaf of bread. And that's going to happen with everything, because everything you do, everything you touch, everything you use has credit attached to it. It was created with the help or with the mandatory use of credit, because stuff is not done on cash and carry today. Everything today is 30-day pay, 60-day pay, 90-day pay, what have you. So once credit goes, then the real economy is over. And I would argue that credit busted all the way back to September of 2019 when the repo market broke, and now it's just basically putting band-aids via more and more printing, more and more issuance of debt to try to keep the system afloat. But the end result is going to be paper is going to collapse versus real goods. And what I basically just said there, paper collapsing versus real goods, that's hyperinflation.
At my local bank, I went in to get some cash. I spent cash because I had my identity stolen, and so I got way back on the credit cards, and so but they were complaining to me just out of hand. Wow, a lot of people are coming in for cash. A lot of people are coming in for. I said a lot of people are coming in for cash. Yes, a lot of people are coming in for cash. It's the same way all over town. Are you finding that in Texas? A lot of people are coming. That's where you are in Texas. Are you finding that where you are? People are coming in for cash. They're worried about the credit. They're worried about the system seizing up.
Actually, I have a better standpoint or viewpoint than the banks. Yeah, I've heard some people wanting to take cash out, but my observation is, as a precious metals broker, I've had over the last probably 3 months, I get people contacting me saying, I want to buy gold, I want to buy silver, I want to buy it today, and I want to wire you the money today. I want the money out of my account. And I'm not talking just, small trades. I'm talking about, I've had multi-million-dollar trades like that. I want to do it. I want to do it today, and I want to pay you today because I want my money out of the bank. So, and actually, a good start to that was when Trudeau had banks start to freeze people's accounts.
Yeah.
Once people understood that you could get your money, if you had money in an account and it could be frozen and you can't get it and it's gone, basically it started a bank run.
Are you seeing this from people, clients? Is it just from Canada, or is it from your clients all over? You work for you work for Franklin. Who do you work for?
Miles Franklin.
Yeah, Miles. Yeah. So I don't care about plugging them.
Yes,
they're one of the
this is
big
from all
gold
over.
dealers. They're one of the big ones in the country.
Yeah, they're one of the, I think, 23 direct
Yeah.
U.S.
I know they're a big
dealers.
outfit. They got a good reputation. I'm not plugging for them. You don't pay me for that, but I just want people to know this is not a small, tinfoil hat. I'm in my basement selling a couple of coins. This is a big outfit, Miles Franklin. And are you seeing this from all over the country?
I'm seeing it from all over the world, Greg. This is definitely not just Canada. Yes, we have had a flood of Canadians looking to move their money, but people from all over the world saw this happen. They saw it happen in Canada, and it was unthinkable prior to that. So what it's done is it's spooked the herd, and people all over the world are wanting to do exactly what Jim talked about 20 years ago: get out of the system. And the way to get out of the system is take your money out, purchase gold and silver, and have it delivered. It is no longer within the reach of, if you want to call it, the digital madness. And that's the problem with a potential digital currency is, you said this, or you did that, or you read this internet site, you're shut off. And that's where a digital currency is, without a doubt, headed.
Oh, boy! And then add the, and I'm circling back to the ruble. That's the wild card component in all of this. That's what's changed. What's changed? While now there's a direct competitor, at least for real stuff, in the world, and they are nuclear armed. You're not going to blow in like Libya and they want to have their gold dinar, or Iraq. Oh no, they got hypersonic missiles that fly over the air and fly under the ocean at 200 miles per hour. Torpedoes, Russia. So that's a problem for the United States in the West, who is heavily indebted. Do you think we get it? Do you think this thing breaks down this year?
I think it's breaking down every day that you wake up. Just look at what's going on. I wanted to mention, it was very interesting that before Russia came out with their 5,000 ruble bid per gram of gold, I think it was earlier that day or the day before, Jay Powell came out and said, well, yeah, and he was testifying to Congress. He said, well, yeah, there can be more than one reserve currency. And I heard that. I'm like, what? I can't believe I just heard him say that. But he did actually say there could be more than one reserve currency, and then poof, in less than 24 hours, Russia made that announcement. And that was the shot heard. I did an article a week before that, and I called it the shot heard around the world. Or did you hear the shot?
And you think this is this is not going to get derailed. This is not going to stop. Oh, they stopped doing that ruble thing. They're going back to, no, we had a major break. This is this is a major break in money around the world. Is that right?
This is the biggest news since 1973. Nothing bigger. And understand that Gaddafi did this, Saddam Hussein, they talked about the gold dinar, they talked about a gold-backed currency, and what happened? They got killed. And their countries got invaded and their gold stolen. Well, this time is different because you're not going to have, the U.S. military is not going to go into Moscow and depose Putin and steal their gold. And speaking of Russia's gold, it brings up another topic. The media is saying that the world is going to prevent Russia from selling gold, which is completely laughable. and that they're going to confiscate Russia's gold. Well, I can't imagine Russia having gold or hardly any gold outside of their borders. And what's happening now is this is going to bring up the LBMA, or the Bank of England, who holds, I think it's something like, it's over 5,000 tons of gold. It's going to bring them to the forefront with other NATO nations that hold gold. If you remember, after World War II, they wanted to get European gold as far away from the Russian border as possible. And that ended up being in London, in the Bank of England. So it's going to be interesting to see how this plays out, because remember, Britain is still in the middle of Brexit. And it would not surprise me for Britain to use foreign gold, or the holding of foreign gold, and potentially denying giving that gold back to the owner as a form of blackmail over getting better terms for Brexit. I think that's a very real possibility.
The other real possibility is that I think that you're not going to see gold down to $1,500 an ounce again. I think you talked about the put that. So we have a floor in gold that appears to be about $1,900. And will you tell me where gold and silver are going? A lot of people are like, why isn't it going up? Well, gas is double. Why isn't gold double? Why isn't silver $50 instead of $25 or 24 and change? Why is that on the horizon next? Prices spiking in PMs.
Yeah, you could have said that about nickel 3 or 4 weeks ago, and then it was up 250% in a day. It basically busted. It defaulted. I mean, it busted that market. All the trades that were done that Monday were canceled, and that was basically because there were more paper contracts sold than there was nickel to deliver. And in the case of gold and silver, it's as many as 300 or more paper ounces have been sold to suppress the price. Paper ounces, not real ounces. So once those paper ounces, or the owner of those, step up and say, hey, I want my gold, or I want my silver, it can't be delivered. And I believe you will see nickel on steroids. And nickel was up 250% in 48 hours, a 48-hour period of time. So at this point, gold and silver have been suppressed, and I think that the rig will be broken. It's important to understand that the 5,000 ruble bid per gram, what that does, it sets up the other side for an arbitrage. So if the West, the LBMA, LME, COMEX, if they were to go under whatever the Russian bid is, then you'll have an arbitrage. You'll have buying in the West, and they'll be selling it to the Russian bid. So that's the mechanics of the put, if you will. And as I mentioned in my article, had Putin gone out and bought contracts and forced delivery and forced a default, well, that's basically a declaration of war. But what he's done is he's gone out and he said, if we're going to sell Russian goods, we want to be paid in our own currency. We want to be paid in rubles. And we will buy gold at 5,000 rubles per gram. And what that did was set up the arbitrage so that if the price goes too low in the West, basically the entire world, arbitrageurs from all over the world will step in and keep the Western price at least at 5,000 rubles per gram.
They'll if it goes any lower, it'll be on sale. They can make money.
Right, that's what arbitrage is.
So they can't now the guys that are rigging the market can't afford to let it go down. Oh my
right,
God.
right, because Because Greg, if the
Trapped in their own
arbitrage
net.
kicks in,
Go ahead. I'm sorry. Go ahead.
if the arbitrage kicks in, what that does is that creates huge demand until the price comes back to whatever the Russian bid is. So
Let me hold on. So the guys rigging the market, we all know they're rigging the market. They laughed about it on CNBC years ago. Silver, that's rigged. So the guys rigging the market now have to make sure they rig it so it doesn't crash. Because the moment it goes down to 1800, boom, shakalaka, it gets bought up. And they get screwed. Is that right?
Yeah, exactly. And that's the brilliance. That's the brilliance of Putin doing this by him acting 100%. And I mean, he's the president of Russia, so why would he not act 100% in behest of Russia in order to? From a Russian standpoint, they're selling Russian goods. They want to be paid in rubles, and they want to buy gold. And they're not buying it directly from the COMEX. They're not buying it directly from LME. So they're not provoking a war. They're not provoking the West. But what they've done is they've created a currency war between the ruble and the dollar. And what happens with the arbitrage is the world does the dirty work by making a profit if Western gold is too cheap. It's brilliant.
And you think the dollar is going to get creamed for this in buying power?
Well, yeah, I mean, it's already being creamed in buying power, but ultimately, yeah, this will ultimately affect all financial markets. It's going to affect credit markets, and don't forget that the dollar is a creation of credit. It's not, it's not they go out and actually print paper dollars. It's all done electronically, and the creation of dollars is through the creation of credit. So this is basically a natural way, if you will, of destroying the financial Ponzi scheme. Wow. And without direct malice or firing a shot or anything like that, all Putin is saying is, I want what's best for Russia. If we're going to sell our goods, we want our currency, which we are making real by basically backing with gold. We want real and fair settlement. And one other thing I mentioned in the article, and I put, the irony. I mean, Greg, we grew up in the 60s, practicing to duck and cover under our desk. In what world could anyone have imagined that it would be the ruble that took the dollar down? But that's what it looks like what's going to happen.
Bill Holter, you guys, you're the business partner of Jim Sinclair. You guys do a weekly podcast. You have JS Mindset. Is it still, you're going to keep the site open for now, and then you're going to make it a pay site? Tell me what's going on with jsmindset.com. It's a very important site.
Yeah, we are going to keep it open. My thought is it'll probably be open a year, but more than likely less than a year, because I think everything's going to come down. And I'm not sure that, even the ability to keep it up will be there. One thing that we did do.
Wait. What do you mean by that? That everything's going to come? I mean, everything in the whole internet world's going to come down.
Greg, everything in the whole, if credit breaks, do you really think you're going to be able to go to a gas station or grocery store or, if credit breaks, and when, it's not if, it's when credit breaks, and I do believe it will be this year. I think we're headed for a calamity in the very near future. So, do I think there's going to be all kinds of stuff that's up? No, I think all kinds of communications will be down. I think at this point it's a coin flip that we do or don't go through a Mad Max world for a spell. Now, is that spell a week, 2 weeks, 2 months, or more? I don't know, but I do fully expect some disastrous times. And I did want to mention
wait. I want to come back there. You do expect disastrous times. You're talking soon.
Yeah, it's happening before your eyes, Greg. You're watching it. You're watching it. Do you not think that a 50% or more rise in the price of gasoline is not the beginning of disaster? I mean, do you really believe that prices are going to turn and go back down to where they were a year ago or more? No, I think it's more likely that you see prices within 3 months or 6 months much higher than they are now, and with interest rates where they are, you will definitely see a real estate crash. There's no ifs, ands, or buts about it, because mortgage rates have gone from what 2.6, 2.7 to last week. There was a day they got over 5%, which means someone who qualified for $1 million loan a year ago only qualifies for 550 or 600. So there's, the demand, basically, because interest rates have gone from where they were to where they are, the ability to purchase has been cut by 50%.
Wow.
So who are you going to sell to? Especially when everybody else is selling, especially in a recession where people are losing jobs, have no income, and have to sell. This is going to be 2008 on steroids.
Wow. Oh.
And Greg, I did want to mention one thing we did do at JS Mindset is we've created a compendium that goes back 14 years. It goes back to 2008. And on that compendium is every single post on JS Mindset from 2008 until October or November of last year. That's 11,000 posts. And our thought process is over the last, call it the last 5 years with fake news. There's been so much fake news, so many lies, and what this was honest and real reporting of what was happening. And we hope it's used as a time capsule, and some of these turn up in 20 years, 50 years, 100 years, when people ask, like we ask now, how could that ever have happened in Germany? When people are asking, how could the world have gone so stupid?
Yeah. And then you have a monthly subscription that you're going to keep right now. So what is it, $189 a year? A yearly subscription?
It's 170.
I'm sorry,
yeah,
what?
179.
179.
100. Right.
Yeah. I'll put that up in the after the interview section, and then your link to your compendium deal. And wow. As I close, what would you do as a little guy? I'm a little guy. What would you be telling people to do? I've been doing crazy stuff like putting tires on my car and buying toilet flappers and food and water. I mean, what would you do?
All of that and anything you can think of. You need to stock up on the stuff you think you're going to need. And that includes food, that includes spare parts, that includes, you name it. I bought spare parts to fix air conditioners and to fix one of my 2 water wells. And those parts took me 3 or 4 months to get, but at least I have them. Just think about the things you know you're going to need at some point. And if you can buy them now, buy them now. Because it won't matter what it costs at a later date. The problem will be whether or not you can get it or not.
Yeah. You know what? There was one of the analysts, I don't know, BlackRock or Goldman, saying we're going to have inflation scarcity, a scarcity of items and inflation to go with it. And wow, at that point, it's not going to be inflation.
We already have.
Yeah. So
we already have.
Yeah. We'd like to give you that battery, Mr. Hunter, for your 2017 Chevy Impala, but we won't have that for 7 months. What do you do?
It's like the filet mignon in the back room for $5.99, except we don't have any.
Yeah. But for $59.99, we got a ton of them. Yeah. Okay.
Well, maybe not even that.
Yeah. Okay, listen. Wow, I'm sorry I kept you on. I just kept adding fake endings. But this is a real ending. Bill Holter, jsmindset.com, the compendium. the website, of course, jsmindset.com, and then also your sign-up page for your, you guys talk about, you have Jim Sinclair on, and you and some other folks, and you do a weekly takedown, breakdown of the market. It's in real time, and it's brilliant stuff. And you have stuff like this in your article. Is that article that you wrote, is that going to be the, it's now all about the dollar ruble cross, the irony. Is that going to be a public article?